Hi, this is Ken Boy with the Accounting Accidentally website, where you can find hundreds of blog posts, and if you slide down to the middle of the home page, you'll see links to over 400 accounting videos on accounting. I'll talk about Conference Room toward the end of this video, but what I wanted to do is to continue a discussion I did on inventory valuation. I did a prior video on FIFO, and I'd like to talk about LIFO, L-I-F-O, last in, first out method for valuing inventory. Now, there's an assumption in most CPA questions that prices are rising over time due to inflation, which makes the later units you purchase more expensive. So this basic data of what we buy and what we sell in inventory stays the same regardless of the inventory method used. We purchase items here on these dates for these prices. We sell inventory items here, and the questions you get on the CPA exam are, how do you value the items that you sell? And you'll note here that I've added up the total dollars that we need to account for, $39.25, and those dollars go in one of two places, and only two places. Either you sell them and they end up in cost of sales, or you did not sell them and they end up in inventory. So how do we do it for LIFO, L-I-F-O? We're selling the newest units first. So when we sell 100 units, we sell 75 at 15, and we sell the remainder at 12. So we work our way from the newest backward. So what we see down here is, there's the 75 that I sell at 12, the 75 that I sell at 15, here, and the 25 remaining that I sell at $12. So if I add it all up, the cost of sales is $14.25. Now, what's left in ending inventory? Well, what's left is the oldest items, which are all the units at $10, and the remaining units at $12. So you can visually see that. So here's the 100 units at 10, just like up here. Here's the remaining 125 units at 12, which is taken from up here, less the 25. If I add it up, the total cost that's still on the shelf that's in ending inventory is $2,500. Now you can check your work, because if you add up cost of sales, total in blue, ending inventory, total in green, you get the total units you need to account for the $39.25, which matches at the top. So what we've talked about here is an inventory valuation question, LIFO, last in, first out, assumes that prices are rising. Cost of sales, we sell the newest units first. What's left in ending inventory? It's the oldest units. So that's how LIFO, L-I-F-O, inventory valuation works. If you're studying for the CPA exam, you can join Conference Room for free. And I'm going to sign in, because what I've started doing here is teaching CPA continuing ed specifically for the FAR exam, that exam specifically, which is why I just did an inventory question. So if you look at the Conference Room feed, which is what you'll see, and you go to events, you'll find the page right here, the biggest topics on the FAR test. And if you join, you're going to get updates on what we're going to discuss in these live courses. Each one's 90 minutes long. They start in July of 2019, and how to attend. So if that applies to you, you can join us in Conference Room and take the FAR test course. Thanks very much for watching, and we'll see you next time.